Well, hello, everyone. Welcome to a fresh new week in the market. Welcome to Trading a Smaller Account. My name is Barbara Armstrong. I am a coach and senior manager with Charles Schwab, and I am delighted that you are joining me today. If you are not already following me on X, you'll want to do so because I'm going to be posting a lot of pictures this afternoon of the market drive that we just came back from. And so if you wonder what you're missing, if you don't go to these live events, there will be a pictorial review for you on that. But my handle, Barbara Armstrong CS, you're going to want to follow Kevin Horner as well. He was at that event with Ben and I and Scott Thompson and a host of others in Chicago last weekend, the market drive. And so you'll want to check out what he has to say about those on X as well. In addition to charting and lots of other interesting things that we post day to day. So Kevin Horner CS, Barbara Armstrong CS, be there. So what is on the menu today? Well, today we're going to talk about long calls. We're going to talk about short directional trades, and we're going to talk about different strikes and different deltas. And if you don't know what a delta is, that's no big deal. You will know by the end of this class. But this is an intermediate level class. We do place a lot of trades in this class, and we move pretty darn quickly. So the goal is to place six new trades on 3 different stocks. Those stocks are brought to you today by the letters B, D, and I. And then we've got a bunch of maintenance to do as well. So I hope you are buckled up, that you have your beverage by your side, that you've already gone to the bathroom and you're ready to go, because we are going to be running for the next 45 minutes. Okay, so know that options carry a high level of risk and aren't suitable for all investors. You have to apply for option trading privileges, and not all will qualify. Some of the people that I met in Schaumburg, in the Chicago area, were really experienced traders, and they trade a ton. Others, have never traded at all. Some are trading in paper money. But just know, when you go from paper money to your live account, you have to apply for option trading privileges, and not all will qualify. I'd hate for you to go to place your first trade in your live account and then, have it not be able to place the trade. And that's why I'm going over this. So know that we use the paper money software application on the Thinkorswim desktop platform. And that is, it's really a robust platform. You don't have to know how to use every single thing that Thinkorswim has to offer. In these classes and in my personal trading, I probably only use 5%. And yet, I'm able to accomplish everything I want to do. And so don't be intimidated. Okay. Know that short positions will never be assigned early in paper money. We're going to talk about that, particularly when we get to the maintenance part of our program today. Okay. All investing involves risk. Alrighty, so we aren't going to do much of an overview because Mr. Kevin Horner did a class this morning at 7:30, and he does a fantastic job, 45 minutes just dedicated to looking at what's going in the markets overall. So that will be available in the archives. That is your go-to place for this. So we're going to spend like 2 minutes on that. We're going to place our 6 new example trades. All of these are going to be long calls with 1 ATR targets. And we're going to compare different strikes. That's kind of our topic for today. And then we're going to do a wee bit of trade management. We're going to look at a swing target that we placed on crowd. We're going to look at some long call verticals, and then we're going to look at some of our buy right covered call positions that we've placed in previous classes. Okay, so we started this year. This year we actually started with 25,000. Our max position size is 5,000, which really doesn't matter so much for today's conversation because what we're doing is long calls. And with long calls, this is the more important number. And we are, now up a bit on this account, in our paper money. So our max risk per trade, we want to be in the $500 range. Our focus today is going to be on short time frames. And these are all going to be bullish trades today. Okay, so let's get out to the platform. And we're going to start with a quick look at the indices. So the S&P 500 hit a new all-time high when we were an intraday high. And today's close, if it closes about where it is, it'll probably, be a new all-time high close on the day. So markets are continuing to just grind up. New all-time high on the NASDAQ. What about our small caps? Hitting a new all-time high today. So kind of bullish so far, right? Okay, that's 3. So how about, yeah. And Friday, new all-time high and within a stone's throw of it on the Dow 30. So, and then where's our volatility index? Sitting at 16, and this is a 6-month chart. It's kind of, if anything, at the lower end of the range of where it's been trading for the last 6 months. Yeah. So that's where we are. Okie dokie. And so if you want to know where I found my examples today, I just clicked through. I didn't get past the letter F or G, before I had, my example trades for today. But here's sectors and industry. Oh, sorry. I just wanted sectors. It's Monday. I haven't perfected that talking and doing yet. So if anyone is new and they're wondering, like, how did I get this 3-month category and the description in here? Under trade management mini sessions, if you scroll to the bottom, there's a bunch of quick videos on how I customize things, and that will be in there. So in the last month, which sectors have been strongest? Ironically, utilities nestled right up beside technology, and then healthcare has been making a bit of a comeback. So if you're looking at a place to start, you might start looking there. And then over the last 3 months, technology, hitting a new all-time high today. Communications had a bit of a pullback, so that may provide some opportunities, and looks like it may be finding some support around the 30-day moving average. Utilities hit a new all-time high on Friday. And consumer discretionary sitting close to the top of where it's been trading also. Okay, so let's go and look at our first example for today. And we're going to start with Baker. So with Baker, we've been trading Baker. We've, of late, we've used this for some example trades. One of the example trades we had done on this was a buy right covered call, but we now have earnings coming up in October. And with our buy right strategy, we prefer to avoid trading over earnings. Okay, so what we're looking at here, if we're bullish on Baker, and I mean, Baker is up 20% year to date. So, it's beating the indices. And so if we look at this and we say, okay, if we think this might continue to go up, and we just wanted to do a short-term trade. So Disney's been on my mind lately because I'm going to the market drive in November in Anaheim, which is right across the road from Disney. So let's say you wanted to go to Disney and take your kids or grandkids and have a good old time. So you're looking to create some short-term income that you can take out of the account. Okay, I'm just making stuff up, but let's say you wanted to do that. And so you wanted to do something that you're not going to be in for months. You're going to be in this for hopefully days. Okay, and so the idea with this one ATR strategy, and if you're not familiar with ATR or you don't have it on your chart, you can just come to studies, edit studies, and then type in ATR. Actually, you don't even have to type it in because it's so close to the top. It's right here. And then you would add your selected. Now, I already have this. If you want a definition, click the little, I don't know why that failed to load. It should load and typically will load. So try it again. But it will give you a very detailed description of what ATR is. But basically, this ATR 14 means that it adds up the closing, the range that this stock has traded in over the last 14 days and comes up with an average. And so if we look at Baker as of today, the ATR is over the last 14 days in an average day from top to bottom, it's moved about $1.08. So this strategy is a really simple one. It is, okay, today's high is 49.54. So we're going to take our 49.54 and we're going to add 1 ATR to that, or $1.08, which gives us $50.62. So that's going to be our target. So let me just bring up Notepad down at the bottom. Okay, so these are our examples. And the first one is on Baker. The 1 ATR is 108. And so our target is 49.54, or today's high, plus 108 equals 50.62. Please check my math. Where's AP 514? Is that person? Ah, there, he's here. I'm thinking it's a he. Correct me if I'm wrong. Exit is 34.57 minus 103. If you're playing along, you should be doing this math on your calculator as well anyway. You know, it just helps reinforce the concepts. So our target on this, and if we want to put this on the chart, and you know me, I'm a chart person. So we're going to place this trade today. And then I'm going to change my drawing. And it doesn't really matter where the line goes because we can edit it and then say, okay, 50.62. Here's our 1 ATR target. And so 1 ATR target, or you can just put target. And we're going to show that on the right. So that's where we want the stock. That's our target. Okay. And our expectation is for it to go up and hit that target within a few days. So we're going to come to the trade tab. So you may say, okay, so why wouldn't I look at October then? Well, the reason we don't want to look at October, and I'm going to bring up theta, is because theta for the at the money strike, and this is like a cheap call, right? An inexpensive call. It's only 80 cents. So we're losing more than 5% a day, you know, on an 80-cent option, 80 to 90-cent option, where our time decay here on a $2 option is 3 cents. So as a percentage, it's far, far less. And so because this is a long option, oh, sorry, I made a little typo there. It's 108. So because we don't want theta, this is 11 days, and theta is going to continue, you know, to get higher. We're going to look at the November. So it gives us 46 days to expiration. So Mo is saying, what is this ATR target strategy? So the ATR target strategy is we want to be in, this is an uptrending stock. So our target is hopefully in kind of the middle of the road. And we're hoping to get in, or the plan is to buy a long call, which is a directional strategy. So when you buy a call, the expectation is that the stock is going to go up and the value of the call is going to increase. And so, you know, if we get out, and I'm just going to do this on the first one, but let's go ahead and place this trade. And so if we come to November, if we do the at the money strike, we'd be paying $2 for that. Okay. And our delta is 49. And so what does that mean? Well, delta means if the stock goes up by $1 and we want it to go up by just over $1, right? Like $1.08, then, you know, the value of this option would go up by 49 cents. You know, and so you're saying 49 cents, not a big deal, but that's kind of in that neighborhood of 40 some percent, you know. So we're looking to buy a single, okay? And then we are going to come to first trigger sequence. We're going to right click anywhere on that green line, create an opposite order. We're going to make this a market order that's good till canceled. And this is just kind of a quick way to put this in. And then we're going to say if and or when Baker goes above 50.62, we want out. 50.62. Or if it goes below, so if it goes 1 ATR below today's close, we want out. Okay. Save. When we come to confirm and send and we look at our confirmation, so we want to buy a call because we're bullish, right? Right. We want to sell that call when Baker goes above 50.62, which is our target, or if it goes below 33.54. How much can we make? This is saying it's infinite, but we have a target on it. So it really is not infinite. So we're going to put this down in our long call bucket. We're going to say that this is a 1 ATR target, and then we're going to compare to an out of the money strike. Okay. So why are we going to compare it to an out of the money strike? Are you telling us we're placing a second trade? Well, yeah, because we're risking 220. We can risk up to 500. And so why wouldn't we do 2 calls? Well, because we're going to do another one. 33. Oh, okay, just a minute. Somebody caught a mistake. It should be 47. Yeah, so we could buy 2 if we were just doing 1 trade. It must have been 44. Just a minute. I think I made a mistake here. Our low of the day here on Baker. What the heck? 48.80. So this is 48.80. Earth to Barb. I must have been looking at something else. 48.80 minus 108. So when I hover over today's candle, the low on today's candle is 48.80. Minus 108 is 47.72. My apologies. That did look a little skewed, didn't it? And then this is the high. Let me just check the whole thing. 49.54 plus 108 is 50.62. So I'm going to come back to this, and I'm going to come back to this, and we're going to change this to 47.71. That makes more sense. Yes, RG, thank you. 47 takes a village. Takes a village. And this is why you want to read these out loud. And one of the things that I tend to do is I'll say, okay, the stock is trading at, 49.44. Does it make sense that that exit is at 33? Which is a long way down for a stock trading in $1, an ATR of $1.08. So, kind of double check yourself in your math. So above 50.62, below 47.72. We're putting that in our long calls. And this is a 1 ATR target. And we're going to compare to an out of the money strike. And the reason I'm doing this, somebody said it was a trade we did on CrowdStrike, which is an expensive stock. So we did a pretty far, I think it was CrowdStrike, a pretty far out of the money call because that was all we could afford. And someone in the comments that watched it in the archive said, I'd never play something so far out of the money. So I thought it was worth having a conversation about this. And this is why. So when we look at this and we say, well, do I want to do the 50 strike, which is at the money, or do I want to come out here to the 55 strike? And when we look at this, the delta is 50 versus a delta of 20, which, as I've said, it means this stock would move up by 50 cents, right? With a $1 move. So if I go to the calculator and I say, okay, well, if it moves up by 50 cents, if it moves up by $1 and I gain, 50 cents, and let's say we paid $2.20 for this. So if I make 50 cents on a $2.20 investment, what kind of return is that? Well, that's a 22.7. Let's call it a 23% return. You might say, well, aren't I better to do one of those than 4 of these? Because this has only a delta of 20, but it goes up 20 cents on a price of, let's just use, to stay consistent, the 65 or the ask price. So if I say, okay, if I made 20 cents on a $65 or 65-cent investment, that's actually 30.7. And so, when you look at it as a percentage, and again, 30.7% instead of like 22%. So it's not as wacky a thought process as you might think. And so I thought we'd just compare a couple of these today. So we're going to do 4, the same trade, only we're going to do it on the out of the money strike. And then we're going to compare them once we're out. And some of these, like our expectation is that these are going to, work out in our favor, or otherwise we wouldn't be placing the trade. But whether, the trade goes profitably or not, we'll compare the results. And so again, on this one, and now we've got the math sorted out, our target is we want to exit when it's greater than 50.62. Or if it goes below 47.71. Now, how do we manage these once we're in? Good question. So make sure we've got our numbers right. 50.62, check. 47.71, check. Oh, this is 1. We want to do 4. How much are we risking? 260. We could lose this entire amount. And then this is going in our long call bucket, and it is a 1 ATR, and we're going to compare to the at the money strike. Okay. This is not a synthetic. A synthetic is where we're kind of trying to emulate the same risk profile, if you will, as buying the stock, or so we'd be buying a call and selling a put. We're not selling the puts on these, although we could. Maybe we'll talk about synthetics on Friday. So good idea. But we've got to have 20, and yeah, the delta is only 20. But it's 20 cents. What that means is if the stock goes up by $1, this will go up in value by 20 cents. And 20 cents is a pretty big percentage of 65. Okay. Where I got the ATR value was from the chart, when we look at the chart down here. Okay. So that is Baker. Let's go and look at Devon now. And these are in the energy sector. So you might be saying, hey, if we go and look at an example, so we're bringing up our watch list. If we go and look at an example of a trading plan, it might say, is the market going up for a bullish trade? Check. We just looked. It is. Is this sector going up? Well, this in the last 6 months has been pretty much uptrending, hasn't it? Yeah, and then we had a bit of a pennant pattern and a diagonal breakout, and it's moving up again today. So sector's moving up, market's moving up. We just did Baker, which is in the energy category. It's moving up. Devon is another energy stock. And, we have something bouncing, a stock that, like, similar to the energy sector that it's part of, it had a pennant pattern, broke out, coming back, and, bouncing off a support level. And again, is this a long-term love affair? It is not. This is a short-term trading strategy. On an average day, what's the ATR? If I hover over today's candle, $1.04. Okay, so if I say, okay, the ATR is $1.04. So what's today's high? So Devon, 1 ATR is $1.04. And so our target on this is going to be what? Well, what's today's high? Today's high, 35. Oh, now I know where I got the 33.54 from. Okay. So today's high, 35.35. Okay. So 35.35 plus $1.04. So that's going to be 36.39. And then our exit, if things don't go according to plan, we're going to say, okay, today's low is 34.57. And we're going to subtract $1.04. And so that is 33.53. 53. Yeah, thanks for doing the math, AP 514. Yeah. Yeah, so 33.53. Okay. So, how are we going to put this in? The same kind of way. So we're going to come out to our trade tab. We're going to look at November and say, well, if we look at the money strike, that's going to cost us $1. And our delta is 36. So it moves up by $1. And we only want it to move up by $1.04. We'd be up 36 cents, which on $1, if it was $1 even, would be about 36%. So it's over 30%. And so, we're not looking for a bases loaded home run here, a grand slam. We're just looking for a base hit. So we're looking to buy a single, and we're going to buy two. That would be $200. Now, we're going to do this same thing here with Devon, because here's a 50-cent strike. So maybe we could do 3 of these and 2 of these. But we want to risk in total about $500. So if we do 3 of these, single order, first trigger sequence, right click, opposite order, market, good till canceled, sprocket, put in the target first, 36.39, 36.39, and then our exit 33.53. Okay, save, confirm and send. We want to buy 3, so we're risking 324, and we're paying $1.08 per contract. We could lose all of it. We want to get out when it goes up and hits 36.39, or if it goes below 33.53, we're out. We're going to put that in our long call group and note that it is a 1 ATR target and compare to the out of the money strike. And again, we're going to do 4 of these. We're not risking the same. So it's not quite apples to apples on this, but if we're willing to risk about $500 in total. So we'll do 4 of these. So we're risking 200. We could lose all of it. And again, this has a delta of 20. But if you look at 20 divided by 50, that's a 40% return. So as a percentage return, it's potentially even greater, if it works out. And there's no guarantee that it will. But, we could lose, like I said, we could lose all of it. So we're making this a market order, good till canceled. We're going to put in the same targets that we did for the first trade. So target first, 36.39. 36. Oops. Now, do you guys want to do a third example? 33.53. Okay, is our next one. Okay, so we're buying 4 calls because we're bullish, right? Right. Our target is 36.39. Does that make sense? It's at 35. Yep. Or 33.53. Does that make sense? Yep. 33.53. How much could we lose? 200. We're putting this in our long call group. And then noting that it's a 1 ATR and we're comparing to the at the money strike. Okay. Yeah, somebody's saying, you know, the answer is yes. Okay, so let's, this is our letter I. Let's look at INTC. So that one's filled. So INTC, gapped up when it was announced that the government was taking a stake in this company, which is, has not been common practice in the past. But the market responded pretty positively to that. And then it pulled back for just a couple of days. And, it's up almost 90% year to date. And we had like 2-day pullback and then it started to rise again. 2-day pullback started to rise, 1-day pullback. And this could be seen as, a new support level here, the bottom of this candle. And so might it continue to go up? And so if we look at this, our 1 ATR hovering over this candle, $1.70. So that's the biggest of the bunch. So this one has been moving a lot. 1 ATR, $1.70. And so if we look at our target, well, today's high, 38.68 plus $1.70. That's 40.38. Like I said, feel free to check my math. And the exit, the low of today, 37.17. And we're going to subtract $1.70. And that is 35.47. Okay, so, and again, how do we put this in? Well, we come to the trade tab. We're looking at November. We've got thousands of contracts. It trades over 1 million shares a day. These are other things that are part of our example trading plan. This is 355. So this is pretty pricey. So we're going to look at the 38 strike for INTC, which is 350. And we're buying a single. Right click, opposite order. And then we're making that a market order, good till canceled. Hit our disappearing, reappearing sprocket. And we're going to put in our target, which is 40.38. And our exit, 35.47. And then you can scroll down here and make sure that these are in greater than, yep, less than, yes, or and. You can also do this when you come to the confirmation page. We're buying because we're bullish, right? Our target, 40.38, is that above 37? Yep. Below 35, does that make sense? Yep. We could lose 355. The entire amount. We're putting that in our long calls. And this is a 1 ATR target. And we're going to compare to an out of the money strike. So we're doing 3 pairs of trades. Now for this one, because this is 350, we're going to come way out of the money. But the delta here, one was 50 and one was 20 on a previous trade. This is 53 and 38. So, we could even go a little further out and say 350. We could come out here to the 43 strike. So we're risking $1.99. Our delta is 35. Okay, so we're going to buy a single and we're just going to do one of these. First trigger sequence. And the reason we pick this, we were buying based on the right side of the menu, simply price, because we don't want to risk more than $500. Okay, so this is market, sprocket. If it's greater than, always put your target in first. It's just, repetition is the mother of all learning, they say. But also, like, if you were doing a long division race, would you do it differently every time, or would you have the same pattern of order in your steps? It just helps reduce error. Okay, 35.47. Save, confirm and send. We want to buy a call because we're bullish, right. Target 43, does that make sense? Oh no, it's the 43 call. Target 40.38, does that make sense? Yep. Exit 35.47, does that make sense? Yep. How much could we lose? Almost 200. So we're coming down to our long call. We're noting that it's a 1 ATR target. So a long call is not the same as a buy right covered call. With a long call is buying a call with the expectation the stock is going to go up. The buy right covered call is buying 100 shares of stock with the goal, and then selling a covered call above it. And you might do that hoping the call will expire worthless. We've been doing it hoping that the stock's going to continue to rise and we'll go through our covered call and we'll be called out. It's another bullish growth or income generating strategy. Tend to look out. That one we tend to look out kind of 15 to 50 days. This one, we're looking to be out by the end of the week. Okay. So I want to bring up something. One, if you haven't subscribed to the Trader Talks from Schwab Coaching channel, you're going to want to do that. So you want to go to YouTube and then go to Trader Talks from Schwab Coaching. And when you get there, what you'll see is whatever is currently being taught. That's what first comes up. But if you go to playlists, and then if we come down to these trade management mini sessions and view the full playlist, I mentioned that if you were new to the class and you were wondering how I customized the watch list, I did a little 8-minute video on how to customize a watch list, or how to customize the monitor tab or your charts, or how to do OCO orders, all that kind of stuff. But what I really want to point out is that these blue ones here are example trading plans. And here's an example trading plan for a long call with a 1 ATR target, which is what we just did 6 of today. And so you may want to watch this. I will put a link in to this. Okay. So I will share this in the chat, but I'll also put this in the show notes down below, so that if you're watching this in the archives, you can come and catch this pretty easily. Okay. So that's that. And then if you missed some of the trade management that we're going to do, so one of the things that if you go through this, there is an example of how to manage this once you're in it. And here's the deal on that. So tomorrow, after the market closes, and we'll do this we won't do it in trading price patterns. I'm not teaching trading price patterns anymore on Wednesdays. But what we'll do after the market closes tomorrow is let's look at the first one that we put in on Devon. So our stop is 1 ATR below. This is a $35 stock. So if it doesn't go up and reach the target tomorrow, we're going to move that stop up from 33.53. So right now, 33.53. This is our 1 ATR exit. That's where it is right now. If tomorrow it doesn't go up and hit the target, we're going to move the stop up to 20 cents below the low of that day. Okay. And then the next day after that, if it hasn't hit the target, we're going to move the stop up to 20 cents below the low of that day. So this is a trading strategy that requires daily management. Okay, so speaking of the need to manage something, we're not going to get to go through as many things as I was hoping we would, but just to review, we did 2 trades on, all of these are long calls with 1 ATR targets, and we did 2 trades on Baker, 2 on Devon, and 2 on Intel, with the goal of comparing and contrasting at the money and out of the money strikes. Okay. Now, for a little management, when we look at long call verticals, one of our deals is we're going to look at our long call verticals every day and say, is there anything that's close to a 50% loss or greater? And if it is, and Netflix is, we're going to come and look at Netflix and say, hey, we wanted it, we placed the trade on this day. So does that make sense? It had a diagonal breakout, came back to retest. So our entry made sense at the time, but then it's come down and it's continuing. Like we've had like a lot of red here. So we're down 70% on this. We're out. So we're going to come to our trade tab. We have a working order on this. These are organized alphabetically. We're going to come down to Netflix and say, you know, we were hoping to get out for a profit. That was the plan. That was our expectation. But even though we're well below both strikes, you know, we still have 60 cents of value in these contracts. So we have another $120 we could lose. We're better to admit when we're wrong faster than we are to just start trading on hope. Like we're hoping it'll go back up, because when we look at the chart, it's not looking like it's about to go back up, is it? Okay, so that's our long call vertical. Our example trading plan, and there's an example trading plan in the trade management mini session for long call verticals. So that's one. Now I want to do one other, and you know, I was going to have us vote on this, but this is the kind of conversation that a trader might have with themselves. And I know we've got to wrap on this, but with Devon, was it Devon? GFS. So on Global Foundries, we sold the 40 call and it's now pulled back. And that call that we sold is only worth 32 cents. So with GFS, it's come down, and then this candle, like it would have been nice had we talked about this on Friday, but we didn't. But it's up a little bit today, but not quite 1%, because it gapped up and then pulled back. And we got into this trade here. What we're going to do is buy back that call and take that $67 and put it in our pocket with the expectation that it might continue to move to the upside, and then we'll sell another call. Okay, so in order to do that, we have to come to GFS and cancel our exit. Okay, so we're going to cancel that, come back to this trade, and we're just going to buy back that call. And we're just buying back the call. We still own the stock. Okay, and then on Friday, we'll look at adding another call. Okay, so that's a wrap for today. There is a survey in the chat, and I know that Kevin has reposted it a couple of times. So I really appreciate that. If you could post it one more time, Kevin. So here's the deal with the survey. 2 questions. 1, I hated it. 10, I loved it, and I'm going to keep coming back. And everything in between. And then there's the ability to put comments in. So somebody talked about doing synthetics today. So we'll look at adding that to our curriculum in a class coming up soon. If there are other topics you'd like me to address, let me know. If you'd like to see more trades or fewer trades, if you like the pace, if you find it too fast or too slow, just let me know. And I promise if you put a comment in there, I'll read each and every one, as will our management team. Hit the subscribe button. It helps. It helps you out. It's another free resource. And then hit the like button. It helps move this up in the trading algorithms so that more people can find this content. So it's your chance to do a favor for a random stranger whom you may never meet without leaving your desk. So that's a wrap for today. Thank you for helping bring this class to life by being here and for being so participatory in the chat. Thanks to Kevin and thanks to the team behind the scenes that bring this, help bring this class to you. Again, follow us on X, Barb Armstrong CS and Kevin Horner CS. Take care, everyone. Have an awesome day. Up next, Mr. James Boyd.